Hey everyone, it's Josh from JoshLM Finance. Today we're going to talk about building a real investment strategy, one that's actually designed for the Nigerian market. We're moving beyond all that generic advice you see online. Instead, we're diving into a framework that helps you make smart decisions based on your goals. Now, just a heads up, this isn't official financial advice, but it is a roadmap to help you start thinking like a pro. Let's get right into it. So I get this question all the time. Josh, what's the hot tip? Where should I put my money right now? Everyone wants to know the single best place to invest, whether it's stocks, real estate, you name it. It's the #1 question on every investor's mind, and today we're going to answer it, but maybe not in the way you're expecting. And here's the thing, it's a trick question. See, there is no single best investment that works for everybody. The absolute best investment for you is the one that is perfectly lined up with your personal financial goals. Chasing whatever's hot this week? That's just speculating. Building real lasting wealth? Well, that takes a strategy. And that strategy actually has a name. It's called objective-based investing. This isn't some new fad. It's exactly how professional money managers operate. They don't just jump on bandwagons. No, they build a portfolio by carefully matching specific assets to your unique goals, how long you plan to invest, and really importantly, how much risk you can comfortably stomach. So it all breaks down into these 3 core pillars. You have to ask yourself, first, what's my time frame? Are you saving for next year's rent, or are we talking about retirement in 30 years? Second, what's your risk tolerance? If the market drops 10%, do you panic and sell everything? Or do you see a buying opportunity? And third, what are your financial objectives? What is this money actually for? Answering these questions honestly is the absolute first step to investing with real intention. Okay, so now that we have our framework, let's put it into action. Your personal strategy really starts with a big picture question. What do you think is going to happen with the Nigerian economy? So let's explore how you might position your portfolio depending on whether you're feeling optimistic, pessimistic, or, somewhere in between.
This slide lays out the 2 extremes really clearly. On one hand, if you're bullish on Nigeria and you're expecting a boom, then your focus is all about growth. You'd want to lean into things like Nigerian stocks, mutual funds, and ETFs to capture that potential upside. But on the other hand, if you're worried about instability, maybe a bust, your focus completely shifts. It becomes about hedging your bets and managing risk. And in that world, assets like USD money market funds or dollar-denominated bonds become your shield, protecting your capital from a potential slide in the Nara.
Of course, it's not always boom or bust. What if you think the economy is just going to chug along, maybe stay stable, or grow slowly? In that case, your main goal isn't crazy growth or extreme hedging. It's capital preservation. You just want to protect what you have while hopefully earning a little something on top. And for that, you'd look at lower-risk assets like money market funds and fixed deposits. But here's the challenge with those safe assets in Nigeria right now. A fixed deposit might offer you a guaranteed return on paper, but with inflation running as high as it is, that guarantee can be a bit of an illusion. Inflation can easily eat up all your gains and then some, meaning your money's actually losing purchasing power over time. So the real game becomes this balancing act between keeping your capital safe and fighting against the very real risk of inflation. But look, your view on the economy? That's only half the story. An even more important factor is what's actually happening in your own life. So let's pivot from that big economic picture to the picture that truly matters, you. It's all about matching your portfolio to your personal circumstances. All right, this one is a non-negotiable golden rule. If you have money that you absolutely positively need within the next year or so, we're talking rent, school fees, essential bills, that money does not belong in the stock market, period. Its job isn't to grow, its only job is to be there when you need it. Capital preservation is the one and only objective here. Let's paint a picture with a specific example. Say a retiree in their 70s. For them, the whole game has changed. The portfolio needs to lean heavily towards preserving capital and generating a steady income. So things like FGN savings bonds and fixed deposits become the bedrock. You might add a small slice, maybe 10%, into stable, high-dividend stocks for a little extra income, and you definitely consider things like annuities to create a reliable, predictable cash flow. Now, here's a common goal I hear about. A lot of people want to invest in a private business, get in on the ground floor of something exciting, but they don't have the time or maybe the expertise to actually run it themselves. So how do you get that kind of exposure passively? Well, a much smarter way to do this is often through something called debt participation. Essentially, you're lending money to the business for a fixed return. You're acting more like the bank.
This is usually more liquid and way less hands-on than taking an equity stake, which can lock up your cash for years and often requires a much deeper level of involvement.
All right, before we wrap things up, I want to share 2 final pro tips with you. These are designed to help you avoid some of the most common and, frankly, most costly mistakes that I see investors make all the time. First up, let's get this crystal clear. Trading Forex, speculating on short-term currency movements, that is not investing. Investing is about buying assets that you believe have long-term fundamental value. Speculation is just a high-risk bet on which way the price will swing. Now, there might be a place for that, but it should only be with money you are 100% prepared to lose.
This next one is for every single entrepreneur, side hustler, and business owner out there. Listen up. Your business is an incredible engine for generating income today. That's fantastic. But please, do not let it be your only retirement plan. I see this happen all the time. Tying your entire future to the fate of a single business, no matter how successful it is a huge, unhedged risk. You have to separate your business's wealth from your own personal, long-term security.
And the solution is actually beautifully simple and incredibly powerful: a retirement savings account, or an RSA. Think of this as your own personal financial fortress. The process is so straightforward. You open an account, you automate your contributions. Even if you start small, just start. And then you let the absolute magic of compound growth do the heavy lifting for you over the decades. This builds a nest egg that's completely separate from your business, giving you true peace of mind.
So, we have covered a lot of ground here. We've talked about market outlooks, life goals, and some really critical mistakes to avoid. Now, let's bring it all together into a final, coherent roadmap for you. If you take only one single thing away from our chat today, please let it be this. Real investing isn't about frantically chasing the highest possible return. It is a deliberate, thoughtful process of matching who you are, your money, your timeline, your appetite for risk, to the right investment that's actually designed to get you to your goal.
So the final takeaway is simple: invest with intention. Don't just follow the crowd or chase hype. Build a strategy that actually works for you. If you found this useful and you want more clear, nonsense breakdowns for the Nigerian market, make sure you hit that subscribe button and stick around. This is Josh from JoshLM Finance, and as always, thanks for watching.